There's a number that keeps bankers awake at night. $12 trillion. That's the size of the global lending market. It's a colossal figure, powering your first car. It powers the biggest businesses on the planet. For centuries, the rules of this game have been pretty clear. You fill in a form. A human looks at your history. A decision comes back. Slow, steady, and predictable. But that's all changing. It's changing faster than anyone thought possible. A new player has entered the game. It isn't playing by the old rules. It's artificial intelligence. AI is quietly rewriting the very DNA of lending. By next year, AI could influence over a third of all credit decisions. That's $4 trillion worth of loans shaped by algorithms. This isn't science fiction. It's happening today, right under our noses. A silent revolution in server rooms and data centers, banks and fintech startups. If you're a lender, if you're a business owner, if you're someone with a bank account, it's not if it will affect you, but how. This shift is creating enormous winners and very quiet losers. For some companies, AI is a golden ticket. Smarter, faster, more profitable decisions. Reaching new customers they couldn't serve before, cutting their risks to the bone. For others, it's a terrifying black box. Headlines about bias, massive fines, systems going wrong in ways no one can explain. They're worried, and rightly so. The stakes are immense. Getting it wrong could be catastrophic. So why should you keep watching? Ignoring this isn't an option anymore. The change is here. It's picking up speed. Small local credit union, massive international bank. This video is for you. We'll cut through the noise and jargon. We'll show you what's happening behind the scenes. We'll explain the tech in plain English. A clear, practical guide to navigate this new world. Don't get left behind. Over the next few minutes, we're going on a journey. We'll start with the shock, the sheer scale of this disruption. But we won't leave you there. The goal is to move from that shock to a solid, actionable playbook. This isn't about scaring you, it's about preparing you. We'll break this complex topic into simple, manageable pieces. No computer science degree required. We'll talk like normal people. Real-world problems, real-world solutions. Your essential briefing for the new age of lending. First, what's changed under the bonnet? From simple credit scores, rule-based systems, to powerful new AI models. How they use vast amounts of data, some surprising, to make decisions in the blink of an eye. Simple examples. Machine learning, training data. AI spots patterns no human underwriter could. Better risk prediction, less fraud, faster approvals. It's the engine of the new lending machine. Next, real results, the good and the bad. Case studies slash default rates grow loan books, but we won't shy away from the failures. Hidden biases, unfair outcomes, model drift, huge financial and reputational damage. These stories hold crucial lessons. With great power comes the need for great responsibility, and that vigilance is the price of innovation. Finally, the playbook. A clear, numbered list of steps to start with AI safely. Not theory, practical. From small, low-risk pilot projects to monitoring systems and keeping humans in the loop. Work with compliance teams, build audit trails for regulators. By the end, you won't just understand the threat, you'll have a plan to turn it into an opportunity. For generations, lending was a straightforward affair. It was built on a foundation of simple rules and a bit of human intuition. He'd look at your job, your income, and how long you've lived at your address. He'd pull a credit score, a single number that tried to sum up your entire financial life. This score was the Holy Grail. It was a simple, predictable system. If your score was above a certain number, you were in. If it was below, you were out. Simple as that. These old systems were easy to understand because they were built by humans, for humans. They were a checklist. Do you have a steady income? Tick. Have you paid your bills on time in the past? Tick. Do you have a big enough deposit? Tick. The rules were rigid, but they were clear. The problem was, they were also dumb. They couldn't see the bigger picture. They couldn't understand context. A single late payment from 5 years ago could haunt you forever. A good person going through a short, rough patch looked the same as a serial defaulter. It was a black and white world, with no room for shades of grey. And then there was the human element, the gut feeling, the bank manager who knew your family. But it was also a massive source of inconsistency and bias. One loan officer might be having a good day, another a bad one. Your chances of getting a loan could depend on who you spoke to and what they had for breakfast. This old world of lending was slow. It was expensive to run. It took days, sometimes weeks, to get a decision. The whole process was friction-filled, and because it relied on a limited set of historical data, it locked millions of people out of the system. The young, immigrants, the self-employed. They were invisible. They were financial ghosts. Something had to give. The world was changing, but lending was stuck in the past. The big change didn't come from the old banks. It came from the outside. It came from technology. While traditional lenders were still relying on dusty old credit files, a new generation of companies started asking a different question. What if we could look at more than just a credit score? What if we could use all the data that's now available to build a much richer, more accurate picture of a person? This was the spark that lit the fire. The move from a handful of data points to thousands to millions. The shift from a snapshot to a feature film of someone's financial life. It can look at everything. How you manage your bank account day to day, how you use your phone, the websites you visit, even the way you type information into a form. Now, that might sound a bit spooky, and we'll get to that, but from a purely risk assessment point of view, it's a gold mine. Each piece of data is a signal, and this engine is fast. Unbelievably fast. The new way is instant. You hit submit, and before the page has even finished loading, the AI has already done its work. It has ingested your data, compared it against millions of patterns, calculated a precise risk level, and made a decision. What used to take a week now takes less than a second. It's like switching from a horse and cart to a sports car. Both will get you there eventually, but one does it with a speed and efficiency the other can only dream of. Right, enough of the horror stories, it's time to get practical. The first step is simple. You need to map out your world. Get a big sheet of paper and draw out every single decision you make. From the first fraud check, to the underwriting decision, to setting the interest rate, you need to know where your decisions are made. You'll spot the bottlenecks. You'll see the decisions that are based more on gut feeling than on hard data. These are your potential starting points. But don't try to boil the ocean. Don't try to replace your entire underwriting system on day one. The key is to run a small, low-risk pilot project. Pick one specific, isolated decision. For example, you could say, we will run the AI model in the background on our personal loan applications for 3 months. The goal is to see if its risk predictions are 10% more accurate than our current scorecard. And it's safe. The AI isn't making any real decisions yet. This lets you test its performance against reality without risking a single penny. This approach gives you a safe space to experiment and to fail. And you will fail at first. But that's the whole point of a pilot. You learn these lessons on a small scale. This is how you build real-world expertise. It demystifies the technology and builds confidence. Your second step is to prioritize simplicity and explainability above all else. Start with the simplest possible model you can. With a simple model, you can see exactly which factors are driving the decision. The model can literally tell you, I am rating this applicant as a higher risk because this is gold. It means you can explain the decision to a customer. you can explain it to a regulator. This builds trust. Your simple model also serves another crucial purpose. It becomes your baseline. Is that extra 1% of accuracy worth giving up all explainability? Having a strong, simple baseline forces you to have an honest conversation about these trade-offs. Once you have this baseline, you must build the systems to document everything. Every decision the model makes needs to have an audit trail. You wouldn't let a trainee pilot fly a passenger jet without a senior captain sitting next to them. You should treat your AI model the same way. It needs constant supervision. This is your third step, setting up rigorous monitoring and alerts. You need to watch your model like a hawk. Remember model drift, the silent killer? This is how you fight it. First, you monitor the data going into the model. Has the average income of your applicants suddenly dropped? Second, you monitor the decisions coming out of the model. Is the model suddenly approving a lot more loans? Finally, and most importantly, you must monitor the model's performance against reality. This closes the loop. It connects the model's theoretical predictions to the cold, hard reality of profit and loss. That's why your fourth step is to design a system that keeps humans in the loop. All applications that are declined for a high-value loan should automatically be sent to a senior underwriter for a final review. First, it acts as a crucial safety net. An experienced underwriter can look at a case and say, "Hang on, this person is a good bet." At the same time, you need to bring your legal and compliance teams into the room. Get them involved from the very first day. Finally, you must proactively test for bias and fairness. Don't wait for the regulators to find it for you. You need to ask these hard questions and measure the answers. We started this journey with a shocking number. We've seen how this technology moves us into a new era of instant data-driven lending. We navigated real-world results, incredible successes, and cautionary failures. From these stories, we built a practical playbook. Start with the basics. Map your decision-making landscape. Run small, safe pilot projects. Begin with simple models. The playbook provides a structured path to innovate without reckless risk. This journey from shock to playbook was designed to prepare you, to move you from understandable anxiety to informed confidence. The risks are real. They are not unavoidable. They are manageable. Follow a clear, disciplined process. So, where do we go from here? The first and most important message is to act now. This is not a trend you can afford to watch from the sidelines. Your competitors are already moving. Sitting still is the biggest risk of all. Acting now does not mean acting recklessly. It means acting smart. Take the first small, deliberate steps in the playbook. The journey of 1,000 miles begins with a single step. The goal is to find the right balance. Balance algorithmic power with human wisdom and common sense. This is not a technology problem, it's a leadership challenge. Build a culture that embraces experimentation but insists on accountability. Final call to action. Prepare, test, learn. Don't be intimidated by complexity. Start with simple things and build from there. The future of lending is being written now in data and algorithms. Be an author of that future, not a casualty. The opportunity is immense, but it belongs to the prepared. The time to start preparing is now.